This is just limit orders I'm trading with here, and I'm putting in some buy at the markets on the British pound on this pullback to the breakout. Now, if you were to really trade very aggressively, so to speak, you would put your buy limits on this half-hour hump. This would be Bill Williams. This fractal here. And here, so you have resting buy limits, and you're waiting for the fill. And say you put a, I guess you'd call this a volatility stop. It's based on so many bars back. So the more bars back you go, the more liberal the stop, until you reach the point at which, hopefully, you're buying here with a stop here, but you're also willing to buy even a deeper plummet. So you always have to have more dry powder than live powder. Here's a volatility breakout, right? Loss of volatility from a underneath. This is the undercut. This is cantilevered out too far. You have a, you can't build these stairways to heaven like that, right? Here is the double top in time, only seen on the 30-minute. You can't run the tick charts on that. You gotta go 30-minute raw dog. And Jesus. This is child's play, right? Half-hour charts, 48 chances to lose money per day. So the market orders, you can see all the times you would have hit the buy order. This is when the market's coming down. You could buy a little bit. And if you're waiting for this wedge, there was the first, this is supposed to become a, if you're using top-bottom theory, right, double top becomes a bottom, but this is supposed to be, if this is a real move down, we come back to here, and the sellers are supposed to come in, but they really don't. They don't do that so much, as the kids say, not so much. And, of course, you have the trailing 4-hour, if you just take a rough estimate of lows. You know, if you are going to trade moving averages, just put a 10-period lows running. 10 periods of high, 10 periods of close, and you can just see an envelope there for me, right? You can just kind of figure if you're running a moving average on lows, you've got your own, you know, Bollinger Band just kind of suck because it has this like giant explosion in it. Whereas if you're running a moving average of highs on a 5 period and low 5 period, you can see the volatility channeling in, and you can see, you could leave this at 1, so you're buying at support on that moving, and so that's a moving average that I could trade. I could say, okay, let's put in a moving average of 5, and I go exponential and make it really big. I'll just make it yellow, because we should be able to tell that it's different line. So go yellow, and I'll go like I'm going like big like this, and I'm going to go, yeah, 5 is pretty wide actually. And I'll go for the linear weighted, to snugger fit. Put that on the low. We come back, and then we put one on the high. So here, as you come into the, maybe it's a different color here. It looks like crossover through the lows. So here's where you really have to snug that up. So this is like your low cloud. I guess I should make that white. So I'll make the bands white. Yeah, that's what I'll do. So here, fatter, I'll just make it super fat. And just like my girls. Well, pH fat, right? The better fat. This 3 period. 5 was too wide. This 3 period lows. Now let's put the 3 period highs on. And this is just a simple moving average band system. It doesn't get any more simpler than this. Go for the, and we'll just switch this to high now since you established the color and everything. And there you go. So that's the cloud, the high-low cloud. And obviously you want to sell into the 3-period cloud. And buy here as it squeezes in. Here's the crossover. You definitely want to buy. This is the exception that proves the rule. And this is also the low, which would be the open if this is a bullish candle. So you're getting the envelope of volatility without regard to close, and you still have the close inside. So you can see the internal double top, and you can see what the smoothed out 3-period, or you could make this 1 period here, but then it gets kind of jagged. If this is 1 period, then you never get the crossover. Here, we're going to jump outside the channel. Here, obviously, you're going to buy near the channel bottom. It's like auto channel. Here's a 4 hour. You're going to sell up into this white. Here's your sell. You're going to buy as you get near the white line. Here's the volatility's dropping. Convergence on the 3-period high and lows. That's choking down. So if we wanted to buy this on the 5-minute, you can see the here was the volatility breakout window. You have a double top, low volatility, breakout, pull back to the breakout point. The highs become lows actually on this envelope trading because this is the actual high to the actual low. It didn't close in there. This was the close in here. So if you were sitting here watching this happen, or you just put in your good old-fashioned buy limits, they're going to come in on the undercut, this cleft. So after the backfill, there's the catch, right? We have to get a post in here. We need to establish a rivet point here, and that's the should be the 25s or something, 25 pips deep. Now, it's really about, if you had a trailing sell stop here, or your conservative or kind of a expensive entries to have a trailing sell stop on a 3-period moving average. Here it goes short on stops. You may be short on limits here because of the expansion in volatility, and you laid out a grid out in front of the market, realizing that was what's going to happen. The other option was to start buying this hole. Buy, and anticipating a retest of this. That may not come. A trailing buy stop bot wouldn't get filled until like slightly here and a little bit here. Maybe he still has pending buy stops here for really kind of late entries. Certainly there's 2 dojis followed by a kind of a bigger doji here. So this is obviously the fulcrum. This is obviously going to be the feeding zone, whether you go up or down. So it wouldn't matter the direction. And it's really how big you get in. So the bigness here, you put buy stops in here, or you buy at the market right now. So I'll buy at the market because I'm anticipating a break of the last 5 minutes. If a strict 15-minute trader, you would be putting breakouts in because the volatility is drying up. At the end of this, so at the bottom of the hour here, volatility just dropped off, and we're either going to continue this, or there's some rattling before we get out of the gate. Now, if you make money off the rattle, you're going to have to buy at the market here, and then you got to put buy limits in like this and like this. Now, this is really, this one is 15 minutes on that first drop. And the next drop is like here. It looks like this, 15-minute buy. So you want to buy low, and you don't really care what you're buying. You know, this is a daily euro versus the pound. It doesn't matter. You're always going to want to buy low. And this is super deep, and this is new lows. This is uncharted price here. Pretty much for the day, these last 3 tickets. How long does that last? That's the big deal. there's the stops. I will get in cheaper than I 2, 3, this is 2, 4, 6, 8 pips deep, and the stop is softer by 1 pip. So you're getting in. Now, if I hit this button again, I just layered them up, offset by as much volatility as the market's dishing out right now. I can step away from that ticket. This is like, let's make a deal. Behind door number 3. We can step away from it, let no more trades here, or I can put in the psycho deeps that are actually beyond the low of the day. What's the chance at this time of day we're going to go down and blow out the low of the day? Maybe retraces. And of course, here's the thing. Is it worth buying at the market right now? Is it better to wait till these get filled? I think it's better to wait till these get filled. Because in essence, this is like getting at the market. 2 pips deep on a currency that has a half pip spread. So if we let this fill, and this thing's coming off, the dollar's coming back with a vengeance. Okay, so I see a buy. We're going to get filled on the limits here. So if we bought at the market, now we buy limits of British pound and put in the super deep limits that are really super deep. They're all the way back to the starting gate down here. If you consider this to be support. So the dollar's going up again, unfortunately. So we have to buy the dollar. And looking to sell the dollar yen if it keeps going higher here. So I put in a massive sell bank above. The first scalp was above the wicks here on the daily. So it's just about right about here. And then so this was the big major trap. It's like a high probability ricochet, prepared to sell all the way to here, but only filled to there, and then it comes back. Comes in below here. Can't really see it on here, but if you go to the, if you stretch this out and just look at 25 pips worth of trading, now you can go to the 1 hour and see that after we came up here, there's a vicious pullback to here. So that was the trade. Although you never know it by looking at the 4 hour, really doesn't reveal the thing, and the daily certainly doesn't show you the whiplash. After getting filled up here, just the wick alone here is the trade. So just dialing in on that. You fix the scale there, and then you can zoom into the 4 hour. The 1 hour, you can see this was the fill, this was the exit, all the way back to here. Then you're getting long here, so this is the whiplash bash. This is Ted Nugent. You have the double bottom retest, sneak attack at the doji, and a real doji, because this is a flatline doji. This is flatline doji, better than, this is a combination of candles and line chart. And this is an inverted hammer on the half hour. Like, you don't need to know, like, if it's down, it's down. It's inverted, it's down, whatever you call it. This would be, would people anticipate this to be the shoulder, the head, the shoulder? Any bear worth his pattern is going to say, well, okay, well, we're going to, well, where's his parachute if he's wrong? His buy stops here. Triggered here from a stop entry vacuum hole fill presentation, but it's also the auction on the 1 hour. Double auction, actually. Then it goes up. The sellers come in here naturally. And for the people that are selling new highs, which I'm kind of doing for the most part on limits, the rest of it's just going to be, as I say, discretionary trading. But the target, if you're got this breakout here, your target, if you didn't get out here and you moved and you'd have a stop here, they just blew your head off here on this pullback. It's very vicious, violent markets. Now, if you're trading very lightly, you would never even notice. But if you're in really big and you're really making a lot of money very quickly, then you're just going really fast in a car, and it's like you've got to realize that if you hit a mailbox if you don't do body damage, it might swing around and just lop off and come through the windshield, right? Always a consideration. Here, it looks like we're going to keep going up. So I would sell, if I'm not long, I'm going to sell above here just randomly. So these aren't exact, but I got some of the pips are like 1 pip off on some of these orders. But essentially, I'm just going to sell up here blindly. And I figure anything above here is overpriced. I'll just keep laying these in. I'm going to buy new lows on New Zealand dollar. It keeps coming down. I just keep on buying. 8 hours. British pound's pulling back. So here we're going to buy. We just got filled on these 3 tickets. Now I'm going to buy more on limits. So I'm going to load the wagon here on the limits. British pound. All the way back to the starting gate. There you go. Now it's going to be hand-placed orders because now it's getting in where I have to come in here. I don't have a script for that, the hotkey. So I just start buying all the new lows here. And if you go to the 1 hour, it doesn't look that bad. It looks like a great place to get in. You're getting at the support of the... right? You can make any kind of excuse for trading. That's the beauty of trading. You can make any reasons up. You got to love the Batwing people, though. You know, I mean, the numbers guy... I came across the numbers guy channel the other day, and he had the number... He was tying a death of a famous person to numbers, and I thought that was a stretch. I thought that was out there. I think it makes flat earth people look almost sane. It was really, really out there. Okay. So we're waiting again for the markets to regroup. The 1 hour chart is very, very boring. I guess there's very few trades if you use this high-low filter. So you have less chance of blowing up the account with the really, if you're looking for a crab and a bat at the same time, you're going to really not be blowing anything up because you'll just be sitting on the sidelines waiting for that pattern. Here, look at the new lows. So here, we're going to buy all new lows here. I got some super deeps on a lay in here. Hopefully the account's going to survive this. I'm going to start buying fresh lows. 36 pips deep. Now I'm going to go 40 pips deep. And this kind of, I call it logarithmic, but it's really just spaced evenly. It's like a space like this. So where the cursor is going to be first order, and then it's going to come in so many pips apart and buy more lower. So I keep repeating the same order here. I can cover a 50 pip range if I could go here. Now I'm in about 60 pips deep there. So I can buy all the way to here. Now if there's enough money in the account, I can survive a pullback all the way into this deep. Here's I'm going to start buying here and all the way down 3 orders evenly spaced. Here I'm going to buy this big crush for the next 10 pips. 6K, here's a 12K. So here's my biggest winning risk, 30 to make 80. That has to be super deep here because you're anticipating a complete cutback. Here's the scalp, 20 to make 20 starting here. 20 to make 20 starting at the lowest low here where everybody's getting crushed out. We're backwards trading. We're trading insurance policies here. See, everybody stops. Now we could buy at the market because we see that we just made a new low on the 1 hour. So we definitely want to buy that. We're at support. We're at the lower band. We're oversold. I don't even know if this key's going in. So I'm going to put stops in now. Now I'm going to put in some really terrible trades. These are buy stops with wide stops, but wide take profits. Now let this bake. So you're just cooking on the fly, right? Someone just throws a burning meal in front of you, and you've got to manage it into the box and put a lid on it, right? If you do all these hand-placed orders, it's very unemotional trading here because you're like, okay, I'm going to buy here. Well, duh, right? Who isn't fucking buying down here? 8 hours from now, would you buy down here? I'd buy down there if it dropped down there in like 20 seconds. Would you buy here if it dropped in 8 hours? Yeah, I'd buy there. So all these are 8 hours. This is a risk $6 to make $9 there. So all you have to do is keep putting this. You get to about $100 in 10 of these drops, right? If every trade were to work out, maybe it's maybe you're not in big enough for this buy. So how to get this perfect fill? Well, it's gonna, like here, I'm already staring in front of this giant possible fill. I didn't do the math. I don't think here's a break-even order, 20 pip stop here. 8 hours from now. Now, if I had to add to the account, so let's say this is a real account, and I have $100 in here, and I'm like, you know what, you fucked up. So if you can't make $100 and $150 in a week, you know, maybe that's asking too much. You need to make 10 pips, or you need to make 20 pips on a 1K to make $2, right? So if you're in, start to go by size. If your limits this trade 20 single orders with a 50 pip stop, then you're risking $100, right? What? No, you're risking yeah. Like you want to pick a number that's not bigger than what you'd spend on a, say, a hooker or something, because you got to make trading fun, right? Make trading fun again. This concept that, and of course the that risk up front is going to let you off the hook as far as being right and wrong, and then you could just consider whether, like, I guess if you're going to go out with, you're gonna rent a hooker, right? Rent a babe. And now, do you think to yourself, well, what if she turns out to be like a pretty woman, right? It's supposedly the hottest looking babe or something. So what does that say to people's brains that they think that that's... so you're going to bet that way, right? And so I want to go against the crowd on this trading thing. I'm just going to look at the risk numbers. And I don't care. If she falls in love with me, wouldn't that be great? Now, that would be you being right about the market. If your dream is that the hooker is going to ask to marry you, that might be in the back of your mind. But is it going to get away the hot sex you paid for? So if you had to hire somebody, rent a friend with benefits, what does that cost you per day? And that's really what the market is, right? Because but the market has the bonus of giving you money back. So if you're really good at sex, like imagine you get a hooker, and you're like, I'm so good at sex. She goes, you know what? I enjoyed that more than you paid for it, and that you get a refund from her. I guess then you'd be on the other side. You'd be a gigolo, right? You'd be on the other side of that equation. So yeah. Look at this. Look at this big trap here in the daily New Zealand. Who's not buying this? My God. We buy that on stops. We'll put some retail ticket orders in there. Here comes the British pound with a vengeance. Look at this entry at the 3-period low. That's what I'm talking about. That's the envelope. So you're buying this envelope and you're selling at the envelope. 3-period, linear weighted. No brainer, right? But you had the scalp out of something by this time. There's no way in hell these markets just replunge. Now look at the pound coming back like a rape date now. Off of the, had to revisit this. Still had to come back to these dojis. So the feeding zone, if you're up for this drama, and of course here's the trap, right? New lows. You had to buy this for the scalp. High probability trade, you could have run a wide stop. You could make this. Because how many times have we seen a new low be the best price you're going to ever see all fucking day. No offense to all the other new lows. No new lows here. First new low by this entry with this stop is this trade, right? That's one trade onto its own. Then you've got the, well, I'm buying these fresh lows, which are fresher or staler actually than these. These are the most recent lows. This is the cave. So this is, I call this cave trading. Your order's in the cave. They come back and they revisit the cave because, you know, girlfriend still lives there. They're coming back in there and molesting your girlfriend. Then, but the molestation point, the retest, right? Brutal. If you're expecting this to happen and you just want to get paid today, brutal scenario for the, because sometimes the market does do that. It does take off and just go north without a care. Not like it can't, not like it hasn't happened, but being prepared for all situations. Like here, look at this. This is like a half a pip stop out for some money management bot or money management freak that's worried about, oh, well, I'm going to trail my stop. I'm in for the long haul. You know, I'm going to, honey, we really are going to have fun. Right after I get off, I get done beating your face in, we're going to go on a vacation. You've earned it. That's the, I think that's the, what OJ Simpson, marital advice, his trade plan. Yeah, you need a trade plan for these renababes. So yeah, you need first you need the inventory of hot babes. It's the only way to make money. Only way to make 20 grand is to start with 40. Okay, retest coming, right? Always a possible retest on tech. One thing about these markets you can be guaranteed is that if you don't like the price, just wait a few minutes. There's something in there for everybody. But having your heart set on a target is probably the worst thing in the world. Right? Isn't that the worst? Here, it looks like a buy, right? But we're just going to buy a little bit. And then I'll put most of the orders in as limits. I'm going to go see how they're crushing the hell out of this thing. Look at new lows. Still probing new lows. Okay, there's too many orders here. I'm going to go super deep. And British pound's pulling back. Coming into my trap. Down here. This is the big round. $1.28. Possible slam back here. Dollar's going up against the yen. We're selling into this dollar yen. So try to get the circus of orders going here. We're selling up into this one too. Sell, sell, sell. And just throw them up there. I don't give a fuck. And it's a demo kind of. Break even, 20 pips. Here's some greedy 20 pips stop, 40 pips. I'm not going to wait for that trade to play out. Honestly, I just want to hit it and quit it. Like if they spike it up here into this bank. Okay, more buy stops. So if you're putting in buy stops, you can still put them in here on the 5-minute chart because the rules are that if it's down, you can buy. So buy stops here and buy limits, and we're going to buy at the market at just right now. Fuck it, just buy here. Honestly, depending on how far away these stops are, they're a little tight. So these are too market-ish orders. If they're up here, they're shitty fills. So this is the problem, the balance point between like, oh, am I getting a bad fill or should I have waited for a better price? This is the hardest part. Because there's a threshold at which if you use all your margin for a millisecond, right? Like if you're in super fat because you have the pure genius to place pending orders at the right prices, that count will just double. Now it's a matter of not doing that again for a while because maybe you just lucky in the fact that, but if you have super tight stops, what's going to happen is the account's just going to go flat and you're going to lose the opportunity momentarily. If the next order bank's deeper and it's wider and it's laid out properly, but you're really foaming the runway. These are really foam the runway orders, I guess you could think of it as, because you don't know how far that plane's coming into the concourse. And if you can have the limit grid there to absorb the crash and the recovery. So for the people that go after the damsels in distress, you're really looking get this train wreck of a girl. Now, this is not a girl that you would rent. This is a real life high maintenance girl. As the other approach to trading is that you're looking for that girl that just needs something, some shiny things to distract her that might cost a few dollars. Now that's your dazzle. These are the limit orders that are just right around the market to pick up those momentary lapses of reason, the impulsive. So you're making money off of impulsiveness. Now it might be that the market, that the person is enough fun that you're willing to spend the money on some type of shiny object. So you can definitely a buy here. So why are you buying here? Because you're buying new lows. It's really very anti-trend trading. So you're really looking for her to fall. You're counting on something going wrong so you can rescue her, right? So this is what you're counting on here. You're counting on the market to plunge into your buy limits, in essence. And I don't know any simpler way to put it. Here, this is more of a planned vacation, putting in these drops, right? Hotkey trading, if you are going to trade at the market, and you got a button that you're going to hit, you are really shooting at, you're chasing an animal, and there's only certain moments that you have enough time to load the weapon and try to even make it worth your while. Whereas if you have all these pending orders in here, you wouldn't think twice about the other side of that trade. Then you could just trade it back and forth. You don't have to get married to the hooker. So you don't have to marry her. Not that you wouldn't if it turns out that you have the pretty woman, but this is what people are looking for in the markets. They're looking for the scanner, right? They want to run that scanner to find that hot chick in the pattern, right? Because if this pattern is a good pattern, if it's good, we're going to load the wagon on this pattern. Like, I'm going to have 20 kids with this girl. She's so hot, I want to create a new race from her. Now, this is the thought that people bring to the market, right? Aren't they? They go, oh, God, that's such a good... I'm going to trade that pattern on every currency pair. Yeah, but you don't understand. The other chick, this other currency pair that has a wider spread, she's already got 40 kids, right, of her own. Now you got to jump on there. You got to make 40 more kids to offset maybe they're dumb kids, right? So maybe you think you're smarter, you're better, right? So that's the problem. And of course, that's all going to leak into your trading, because you're going to think, oh, this pattern is like, this is it. I only trade this pattern. We transfer that pattern to the next currency. I don't know, maybe it does work. I'm not successful with that. I would trade both sides of that, though. I would trade the pattern. I'd trade the failure of the pattern, too. I mean, we'd trade the constant retesting. Could go on quite a bit of time. And you always think, well, this is the time she's not going to turn out to be a freak. Like, you go to the coffee shop, right? That's the standard. Wouldn't that be the most conservative trading technique, is you take her to the coffee shop. If she doesn't offend anybody in public, then she's made it, it's a 3-period moving average on the relationship. Well, the last 3 minutes, she's had her shit together. I'm averaging her time of behavior. So when my moving averages crossed over, I said, okay, maybe Now, turns out she's doing a new drug that I've never heard of. And I wondered, but no trips to the bathroom. I couldn't figure out which drug she was on. Okay, top of the hour is always a big critical thing here. Time's ticking. Dollar's going through the roof here. Dollar yen through the roof. So I don't think I'm long enough on it, but I'm going to sell into it. I'm going to take the opposite opinion. So yeah, I get the problem here is this is just keeps going up. Where is the price we want to sell is up here though. Sell really high. I think we're looking for a psycho spike now. Just clean up to here. My first ticket starts here to sell. Right at that wick. Big scalp thing. 20 pips. I already placed, I think, maybe too many orders on the way there. Then I'll trade outside of that. One more 25 pip launch up here. So I'm willing to sell up here too. I don't know if it's going to make it. 8 hours, we could make it to here by Asia for a big dense. Then I have the, it's not going to make a lot of money trade. It's this high probability trade though. I'm going to risk 10 pips to make 5 pips. I know I put it in here. Here it is. Risk 20 to make 10. 5K in one drop. So here I put it right on the edge of the wick. And if I take off all the other arrows, it's going to look like this. And this is just a high probability trade only because of the range of... Okay, I got to sell this dollar yen manually. I think that's had it. So it looks like this on the dollar yen. I got the tick chart for the pound, but I'm looking at dollar yen. It's actually backing off. But if it went up here, it would look like this, where I'm going to risk 20 to make, risk 30 to make 20, which is also a bad ratio, but a high probability trade, right? Because if I sell up here, and I'm going to cash out on top of that wick, the fact that we come flying up there and coming back without being here for the trade. Okay, here's the buy at the market. We have a confirmed hammer, so we're going to buy that. We're going to buy limits just because, and we're going to put in more limits. And then I'll put the 8 hours in. Keep putting the 8-hour orders in down here for a possible raid. These raids are like the best prices you're going to get, and it's really frightening to buy as it's plunging. So you place all these orders in advance and commit to the plunge. Take the plunge in advance. And of course you got the buy stop stacking up here, possibly in a small manner. And every 15 minutes it's down, you buy. So you really should wait here to buy. You should have bought this last 15 pip drop. Outside of the envelope. So these are great buys. They're seriously overbought there. 15 minutes. And it's also a retest. You've also backfilled this hole here. Just a great scalp there. Very high probability. Fresh lows come back up. Now the question is, do we start just dripping down, or are we going to consolidate a little bit? Maybe the next trade is to buy here for what you could see possibly have like this. Right? That's possible. What's possible? We could either go straight up. The probability of going straight up like this in the next 40 seconds and go up 80 pips or go down 80 pips in 20 seconds. So as the possibilities start to thin out in your head, if you can imagine what could happen in the next half hour. So I can imagine it's going to go down, say, in new lows again. So I'd buy new lows here, and I would have geared to the buy side here a little bit. Lightly buying this walk down. If you just bought this walk down here, so obviously this is coming back, but if you're buying into that with your limit orders getting filled on this void, you could have got out here at the retest and made money. You could have rode it through the follow-through, realizing you can come in and buy anytime you want, market's constant opportunities. You would just put a buy limit here for the pullback, and they kind of, if you're not willing to take this much risk on that one ticket, then you're screwed. So incremental risk, and one currency's enough for anybody to trade. Now, you could go and take your idea of the perfect girl and look for her in all these coffee shops. The problem is that the perfect girl is not come in the coffee shop maybe yet, or maybe she's in there right now, but you're too busy about building a template of a certain pattern. So not realizing that, so I guess this is what happens if people are gay when they're young. They're like, well, this chick thing's not working out for me. So there's a fork in the road. But for a gay guy to go straight, like it'd be like for you to go bullish and bearish, but live in both of those worlds. That would be the ultimate, right? Because you wouldn't matter. Like if you're getting very lonely, like there's only so many people left on the planet, there's either a chick or a dude left, right? I guess it would be the ultimate fork in the road. But how lonely are you? I mean, no offense, hooking up with your own. Okay, here's the buy, right? So buy stops here. Buy limits getting very frisky here. Okay, wheels are coming off it here. Hit the wrong button. So now we're going to put in the buy stops. And I'm going to put in the end of the world entries down here. This is where everybody's stops are for the big bulls. The trend traders have put their stops in, assuming you think this is going up. So if you look at the 4 hour and you say, oh, it's up, but see, it's a trap here on the 4 hour on that wick. So what if it's a trap and it's going to crush all the way down here? Then you're just going to buy this fresh low here and get stopped out of your other positions. Just buy this whole thing all the way down here. Where you just got to figure people are like, well, I put my stop down here. Nobody's going to touch it. Fresh lows again here all day long. Let's see if we can afford it. Okay, here's the selling into this top still. I'm just putting them in here like a slob. It wouldn't matter. So if you're going to bet $200 on an idea that takes 15 minutes or $200 if the idea takes all week long, I guess that's the question. Here was a scalp. So I could cash out of this. I could bank this trade. Like this is a really kind of like, wow, that was some easy money. Look at this wick. So if I dump this whole position here, which I haven't dumped anything since I started like 40 minutes ago. I don't think I've dumped any. Winners that I don't realize that, you know, if I go around and look at, if you're going to trade all these currency pairs with this, I've got one template. And I've just got really one strategy, is that sell new highs and buy new lows. Like here, I'm willing to sell all these new highs on dollar CAD. Look at the dollar CAD trap. And I was talking to somebody when this happened. Look at this entry. Does it get any better than trap trading on the, look at this, 50 pips off of that entry in that trap. There's the trap trade right there. Oingo boingo. Right to here, the easy scalp, and ride through the auction to the top side. Now we're going to sell on the top side. Right? Painfully obvious shit. over and over again. Looks like a huge rally coming on that puppy. So I got to just jump in. I'm going to go in with the buy stops here on the 5-minute chart. The robot would have been triggered back here on this first break of the highs. The market bot, you're going to buy anytime you get close to that white line, you figure it's oversold. So I'm going to put more buy stops in. Oops. Another pullback coming here maybe tonight. So I'd lay in a bank down here to buy in limits. Capture any kind of bounce in here. Looking for the 20 pip bounce. This is the 4-hour euro dollar. Look at this dumb mechanical trading here that makes money. This is not for batwing traders. 25 pips sideways for 20 hours. Buy stops, sell stops. How'd that trade work out for you? Dumbest fucking trade on the planet. Makes so much money. Break even to here. Double your money to here. Buy the fresh lows. Multifaceted. This is why those guys have those Mormons or something. They got 12 wives. They got a chick that just does the dishes. They got a chick that just drives them off. Then they got their banging buddies. These people thought it out. You know, you got to give these people, the polygamists, you got to give them they got street cred. Let's zoom out. Look at the vacuum forming above. Buy stops would get in on a possible break of this trend line. Don't need a PhD to see that this is lower than this price earlier today, amazingly. And of course, this was the big kahuna genius scalp bounce. If your sell bot's going to get filled on this void, he's out. Now it could be a possible fizzle. Retest of this is the next, you got to get out there. Still climbing north on this puppy, so I'm committed to sell this all the way into the nosebleeds. All the way to this big fat doji here, so this is my big cluster. I'm going to put my giant iceberg orders right here tonight. Comes up to here, doesn't go any further than here. Of course, going to sell here again, but this is the zone. 75 pip sell zone with, say, a 25 pip stop. And there's going to be a bunch of cash outs when we get up into this play zone here. There's a bunch of scalping to be done. This will be the first scalp today, is up here. And of course it's Wednesday, so you get this auction Wednesday. I guess it's the pre-swap auction. There's the daily coming down into possible fills on these buy limits. So I freed up some margin on that bounce. On the New Zealand, it's very short-lived bounces. When the market's dropping like that, so that was what I just cashed out, was a psycho rally here. See how short-lived that was? If you didn't get the fuck out here, because this is like a drift up. I think this was it. Yeah, that was, I think I got out of this one. Here I'm still waiting to get filled. 8 hours, and I go for the 20 pip stop. But you could trade break even all day long here, or worse if you get the right order placement. If I put a if I trade with a 15 pip stop consistently, here a 20 pip stop to make 10 pips. That shouldn't be hard to do, because we can all see the void here. This is going to be that trap zone. Same thing on the dollar CAD. It's not going to matter. Can we get down here and retest fair value here tonight? Why not? And then how many times would you put that in? Well, if you have $15 to make 20, another 15 to make 20, you just keep peppering that same trade in there, right? So you're building the trade plan right on the spot. Some of these numbers are like one digit off in here because you're counting zero. When you think about exactly buying 5K spread over 12 pips, this is 30 pips, risk 30 pips to make 30 pips. You're going to put that order down here because you're anticipating the market crushing here, never going any lower to that. This is obviously support. Everything's support and everything is resistance. Constantly, as you're staring at it. It has to be. All those prices are currently available almost all day long. Whether we make it there or not to your entry to get this wonderful retrace, we don't know. And if you have all these things, all these fish lures, right? You have all these currencies, so you have all these, we basically put messages in every girl's bathroom with your phone number. This is the pending order approach to trading. So you have all those numbers. Okay, we're going to buy this breakout here. We're going to chase it a little bit. So I'd be breaking my 5-minute rule. On the 15, I would say that we have not taken out a new high here. You can still get in. So are the sellers going to come in at this high, 3-period average high now, or is it going to reject it? Are we going to blow through this? Are we going to go screaming north? Put the buy stops in, just in case. It's confirmation on entry now. And buy stops happen to be sitting right at the thing. The scary entry was to buy on the 5-minute chart. Every 5 minutes is down, so buy, stop buying, buy, stop buying, buy. And you're long. And you're very long. You're very, very long. If your first buy was to place a buy limit here, and then once we got there, if you had buy limits all the way to here, say, but once we got there, you realize you didn't put enough buy limits in, then you could step in and buy every 5 minutes it drops. So for 10 minutes, you're buying. And this pending that you put in here has a stop, say, here, and it's going to get out here. It worse than break even, but it's high probability that it can make this much without getting stopped. Because when the market heats up, stacking them in like that to make high probability, risking $100 to make $50, high probability. There's nothing wrong with that trade. If it can't handle that, you would just risk the 20 to make the 10. The next trade may be where the market's really supposed to go, but then the market's going to do something unexpected, like snap back, because if the market's open 24 hours, the chances of you getting on the train at a market order on some glorious move is certainly in the realm of possibility reduced. Now, if you only had pulled the trigger every hour, the market's down, you really have a hard time. It's a hard time of not seeing why you wouldn't buy a little bit on a giant smashdown and just wait another 4 hours. I guess that's the disciplined part of trading. Buy a little bit, you wait. And every time, now you're building this position maybe over, over 4-hour period. Or are you the kind of guy that's going to jump in and go, I just went in and out. I can see it. I'm in, I'm out. And your target is super tight and you're just out. You're really big and you're out. If you just did that all day, you're shooting to make $10 every hour. Even $50 a day. It's better than nothing if you don't have any type of psychological damage you're going to do by losing, risking 2% of your account. If you're really wrong over and over again, can add up. And so that could add up and destroy you. Like here, if I stop buying now I'm waiting for 5 minutes of down and I'll buy again. And if I don't think I can wait and I have enough money in the account, I would buy in limits, maybe that last 15 minutes, and then I put these, keep stacking up these really ridiculous orders where I'm just going to get in on this plunge. Now, when you go to 4 hour, it doesn't look like that's possible, right? You're right here. This is bottom supposed to become a top, by the way, on the 4 hour right now. So you also, it's a pivot. So it could fail and pivot the other way. It could go through that. And the volatility just dropped down as you see the convergence on the 3-period MA. The fact that those are pointing towards each other means the volatility over on the 4 hours down. Here, definitely the volatility is scrunching down. You don't need an ATR to tell you. If you need an ATR to tell you that the volatility is dropping because the highs and lows are converging on the 3-period linear weighted moving average, then you shouldn't be running any indicators at all. So the last thing you want to do is look down to a lower panel. So if you're a price action trader, you want to keep your eyes on that girl's, if you're going to stalk some chick, right, you want to keep your eye, keep track of where she works. I like when people say, I remember I took a first trading course and they said, well, you got to stalk the market. I said, well, so does that mean I got to stop stalking the girls at the mall? Does it mean I got to cut back on that? Yeah, you might have to cut back on that. We've got you listed on the predator list. But I'm a sniper too. Would you have a license for your gun? I don't know. I'm just a scalper at heart. I don't want to really be in for a relationship. When you ever get a massage, just a standard massage, not the X-rated one, but if you get this standard massage and they say to you half hour, 1 hour, I'm like, how about 2 hours? First, I just want to I just want to fall asleep and wake up like healed. Then there's the I don't know, I had this girl give me a massage with rubber gloves because she was a member of the Mensa massage. she was really smart and very firm-lipped. Yeah, this is professional massage, right? So she puts on the rubber gloves, and I didn't have the heart to tell her that when I got home. I was itching like I'd been rolled in some pricker in some poison ivy patch. Apparently I'm allergic to either what's in the gloves. So I was going to recommend vinyl gloves for her next time. And but I didn't go back, though. I didn't know what to tell her. I think this is years ago when there was AIDS and stuff, and she thought she was protecting herself. Like, I thought, God, I hope I don't look gay. She put the HIV gloves on and gave me a massage. Wow. That's like when the broker calls you up and say, you sure you want to put that trade on? You're like, oh gosh, don't question my bearishness or bullishness. I can't believe you're asking me that. Like, what? Okay. So this takes forever, this trading shit. Who would sign up for this? And the impulsiveness of the market. Tons of money to be made in a flash. And tons of money to be made in a slow creeper gear trade. But none of us want to experience. If you don't have any patience, then you're fucked. Right. So yeah, I think that's the balance point for me is price over time, more like margin over time or pain over time. And those trend traders, man, those are the kind of people that should be raising children. So I can see the trend trading point of view because, they're like, oh yeah, MACD and I'm in, and sure my kid's running around naked, but in the meantime, every now and then my kid's brilliant. So I'm gonna hang in there. And once he moves out of the house, everything will be fine. I'm not getting the sell-off in the dollar yen. It's still going up. Maybe turn the corner here. Yeah, there's a tipping point here. And of course, 2 more days left of spontaneous trading. So I have to hang in there. We're going to be trend traders, people. Here we go. 4 minutes before the bottom of the hour, and the British pound is leaving the station. If you've been waiting for this to go up, we did get a breakout. We got a pullback. So we got the breakout catch, pull back into fair value, into the middle of the zone. We're loading the wagon. The 1 hour, the half hour is a no-brainer. There's a double top. So for a structured trade, it's the double top on the half hour for the scalp. You should already be out on the scalps. And maybe you're going to ride the great white breakout of highs. Here is the cut back of the lows, the backfill, bigger vacuum here, baby vacuum fill here. Here's a monster vacuum fill. Here's a baby one, but this is the drop in highs. The lows are going with it, but your trailing bear bots have their counter trend or their risk management tools built in here, so you would make money off of their risk systems coming in. And as you clip those wicks, you probably want to get out of something here. More guaranteed you're going to make money to this than through the roof. So now oops, wrong. Okay, so now we go back into the real market. Go to the 5 minute, and low ATRs coming into this, even though it's going up, sideways low ATRs here. So this should be a real breakout. On the 5 doesn't mean we're going to clear this next threshold, which is the breakout of the 1 hour, or because could be a 4 hour up here. If the scale's fixed, all we have to do is rifle down to the 1 hour and see that the 1 hour resistance is up here. No triggers. There's 3 triggers for the money management bots here. 1, 2, 3. Okay, I'm going to scalp the yen right now because I think that's going up. Scalp the yen. And I got some monster storm coming in here. And I'm going to sell more dollar yen on the north side. And fortunately, everything's combined on this platform, so I can't get out of I can't scalp out. I'm going to sell more up here tonight. Dollar yen could go for one last gasp of irrational exuberance. I'll sell new highs. If we go through the high of the day, I'll be selling that tonight. So we could get a rally in the stock market, brings the dollar up against the yen. Yen goes up to the 112. We sell really heavy into the 112 for the scalp. And British pound is got to be scalping out. So is this the trap? Sellers would have come in here at the double bottom on the 5. You have to be getting out whatever you bought down here. This is your first exit. You buy here, you had to get out of something. You just have to. There's no way around that. Look at this vicious pullback. So I buy, if it comes down in the next 5 minutes, I'd buy some more. Okay. Finally getting the pullback in this. Okay, looks like I'm locked in here. This breakout, inverted hammer, 5 minute. Now we're looking to fill the void there. So the 15-minute bot went long. Or he's getting trapped. And we're looking for the next gust of wind. Half-hour bot hasn't gone long yet. So the half-hour is pretty snug here. You get this real low volatility. It's very easy. Every half hour you're putting in stops. You have to. There's no way around that trade. That is the trade. Volatility breakout stuff. You don't need to backtest this shit. You just need to pick the pip range that you want to decide. The ATR has to get to this for you to get on board. Whether you bought or sold there would not matter. It's a complete blind breakout bot. Then you have the, well, I can see a void up here. So you lay in a bunch of sell limits here. You eventually got filled. And from this low down, you put in a bunch of buy limits. Eventually you got filled. You got double filled. Nothing else matters. There's like a song, nothing else matters. It wouldn't matter. It's complete fantasy to think that there's only one trade. That you just can't make money from placing orders. Yeah, you could. Like here's obviously the double bottom. Support, right? Always going to be a good buy. Who's going to pass up that? Always a good buy to buy support. That never gets old. Buying low and selling high never gets old. But how low is low and where is a good low price? The market's telling you, put your order here. This could be a batwing. This could be a mountaintop. This could be the whatever. Certainly, this may be too risky for you to put a buy stop here and you're worried. Then, you go down the 15-minute chart. Now you really got to babysit the market. And isn't that what it's about in the end? Because nobody wants to babysit the market. They want an EA to do it for them. Certainly an easy visual scan here on the 5 minute, on the 3 period lows running. Okay, huge breakout to the north here now. Huge crush on the dollar. So I'd buy the dollar on pullbacks now. Now you got to switch on the other side of this whole thing. This is where you have to become a little bit split personality. Now you're going to buy here at these fresh lows. Obvious trade, right? Fresh lows. They're going to dump this thing. It's been going up for fucking 40 hours. 4 times 10 bars. Hello? Not going to the moon now, Alice. We buy this thing. We buy these fresh lows here all night long for 8 hours. Oh, he's going to jump. Other side of the chip. Other side of the chip, too. Here. Rally coming. Now, I probably didn't buy enough of this stuff here. This was the obvious trap on the daily again. You don't need to be the market maker. That market maker guy, all he's saying is buy new lows and sell new highs. There's nothing magical about that. That works all day long. We know that trade. Everybody knows this trade. It's how big are we in on these trades? We bet the ranch on that, or are we going to go for the? Are we going to wait for this to fill, this high probability trade, or do we jump in as it's happening? And of course, if we don't make money on one of these bounces here, you can see how brutal this could be. It could keep on melting down. Look at this high probability half-hour scalp. Who's passing that up? Huge monster sell-off. Wow. Deep discount. Here's the doji. Here's the inverted hammer before the slide. Any breakout bot worth its whatever's. 25 pip breakout bot. This is 25 pips. Buy stops, sell stops. You just keep hitting that doji button every 4 hours like a complete moron. This is the moron trade. Even the moving averages would agree with this had you picked the right 8-period moving average, what have you. How'd the range bot feel about these entries? Well, you would just buy fresh lows for the scalp to here, doji, buy stops, sell stops coming. If the ATR goes to 12 pips, you're putting in buy stop. You're just running a doji script. Or you're putting on hedges of the market. But you can't just put one order in here. Like even this breakout here for this trade, you would have had to place those orders. Look at this raid. Look at this fucking raid. That is quick and dirty money, man. That is a raped date. And I mean, that's like, a date shake. It's a date shake is what that is. Look at this. High probability that it comes back to this we want to buy. If it comes below this, if it does one of these insane days, anybody ever seen a day where the market takes out the high that takes out the low of the day, takes out the high of the day again, comes back? I'm talking about pure psychosis. Look at this pullback before this huge monster rally in dollar CAD on the 4-hour. All this involves is you putting in orders in this unbelievable zone, which is the crush back zone here. Now, some people claim this is market maker. No, it's just void filler. We filled the void. Vacuum satisfied. Scalpers are happy. Here comes the raid through the top. They try to sell here. Anybody try to sell there? No, it's not going to go into a range. But when it goes sideways, this is the moment of truth. This is the aha moment for everybody on this trade. On the 4-hour chart, there's a painfully obvious 8 hours of 25 pips of nothing. And forget all that other stuff is that if your robot is up for this entry, he's scanning for a 4-hour. I mean, this should be an easy robot to build, right? Give me a 20 pip 4-hour bar and put stops in. The problem that robot's going to have is he going to get out here, 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 here on 5 standard lots streamed out to a scalp to here, and you just made enough money you can get another 3 hookers? Or is he going to get in like a pussy here? One buy stop here, he puts the thing, he puts a trailing thing, and he kicks you out. What is that robot thinking? Is he running a buy stop, sell stop? Here he gets stops out. Oh, I'd risk 2% of the account on putting more trades on. Or does he put on faithfully, step in front of you and go scanning for the ultimate babe, right? Buy stop, sells. He doesn't get confused during this because he can see this top. You can see this double top where you would expect, but you don't get the raid on Entebbe. But you do get the raid into the cleft here. The undercut of the market is right here. It's about this void here. The ultimate void is the compression. If this was where the party got started, it would also be the revisiting zone, but it just comes in and just nicks that wick. And you have a 25 pip stop on here. And you're looking to make 50 pips. And you're wishing you would have bought the ranch on that trade. That's what that, of course, if you have if you have an order for each one of these candles, means that you're trading as much as the market's telling you to put in. Since this is such a dense support area, that if you bought 1K for each candle that fit the criteria of this being support, and you had enough dry powder to put in orders down here, and your exit's conservatively just a retest. Nothing dazzling. Okay. Well, you can only imagine how much money you'd make. Dollar cat, I'm going to sell it. It's going to go through the roof here. If it doesn't, I just have the drag and drop for invested here. Here comes an attempt again for this to get the party started here. Look at this vicious pullback here. Now, I was babbling, so I missed this entry, but you would buy here at the market, right? If you're bullish, every 5 minutes it's down, you buy at the market. Now, maybe that trade's over. Look at the sellers came in. Once we filled that hole, game over. Now, it does look like you could plunge now. I'll buy the plunge. And then, of course, I have the ghastly amount of buy limits down here. Look at the 4-hour ATRs. It's really not tradable. Step into this window from a breakout. If you're looking for a true range per bar of under 25 pips, there's 4 entries back here. And plus the moving highs and lows is coming down to it, making a point here. Okay, this looks like a vicious pullback now. This is where you have to be ready for the unexpected. Or not so unexpected. Major unexpected spikes. But they should be your friends. So here's the Samurai Creed, good day to die. You can place a bunch of buy limits in this void. Now this could still backfill. This is never backfilled where the dollar yen backfilled a little bit. So this would be the backfill scalp. 20, looking to make, I'll put some high risk trades in here. We're going to risk 20 pips to make 10 pips here. Uh-oh. Okay, major pullback coming. Okay, here comes the slam on the north side of the, here we go. See? Now, you would think that's going to go up, right? You had to get the fuck out up here, see? Now, we will buy the plunge to hell. I must say, this is my favorite trade of all time, is catch a falling knife. So I'm just going to throw these in, and we also have possibly this coming through the floor now. New lows on New Zealand. New lows on Australian, possibly coming. I haven't hit the take all profits key. Now, if I'm actually going to, this is a demo account to test these scripts, I would have to be getting out of something along the way here to keep my equity up, regardless of right or wrong, because if I see a plunge and a retrace and all of a sudden I'm up $2,000, I would just take all profits. Here we go. New highs on the dollar versus the yen. So huge order banks waiting to get filled up here. This should be the psycho scalp of the year. Looking for a 20 pip burst on dollar yen. To the upside here, 25 pips to the 112. Staring down the 112 finally after all this dilly-dallying. So this stuff all happens in a flash. This upward spike coming, and still long on that. Still looks good to buy this guy on the plunges here. So, oops. So here, buy at the market. It's down. We're going to buy at the market. And looks like the yen might not make its target up here. So dollar yen's screaming north, going up into the nosebleeds here. Another 25 pips to the round number, and then maybe this is it though. Very dicey up here. British pound's making a big run. But they got to keep taking this thing back deep to get the spring loaded. So the half-hour bot's been... The ATRs have just heated up, so you can't trade it from a breakout standpoint now unless you're on the 5-minute. And the 5-minute ATRs are too big now. You'd have to go to the 1-minute. So the only train you can get on is the 1-minute train from a candle pattern scenario. This is a buy. This is a hammer, so you put a buy stop in, and you got buy limits running too, in case it doesn't. In case it goes down instead of up from this. So there you smooth out the data for you there. Five minutes falling into this hole. Yeah, I got more orders in here than Jesus. If Jesus was a trader. Okay, this is the break-evens down here. I don't know if my limits are filling on that. Everybody's right, everybody's wrong simultaneously on the spikes. So I'm buying here on fresh lows. Oops. And I'm just going to step in front of the train. And it's putting in a buy at the market, and that has little trailing buy limits. That's optional. So if I hit this key, it's going to buy. It just buys at the market. Yeah, it's pure market. Here's the cycle limits like this. Super deep. I think a half hour. We definitely want to buy this fresh low down here. So they're trapping these guys. We're buying. Here comes a smash back in the big sell off in the dollar yen. Huge monster. Look at this back off. So after 4 hours of up, go figure, right? Now we want to buy this pullback. Yeah, we want to jump on the buy train here. Damn it, I just lost my... Not letting me put any buys in. So here it's like, yeah, I'll go so crazy on this one key here. But the rest of this is all hand placed below this wick. Because this is a huge vacuum that's been forming down here. We're anticipating a backfill into this vacuum. And that's going to be the Black Swan trade, or the big spike. Nobody saw that coming trade. So we're really, if we didn't sell the top of that, we can still buy on the Psycho Plunge backfill all the way into this top here. I think is a valid entry. Okay, scalping to that. Just vicious pullback right there. Look at the 1 hour dollar yen. Nasty. Amazing for the scalp, though. But if you placed all the orders here, because you know this price exists back here, then this is all that would matter, is that you're going to buy down here, right? Where you see it going to go off the rails and then maybe come flying back. So we could have a possible Psycho Plunge coming, And you got to love that because it's very high probability money. Got to get the coverage right here. So if I put a buy limit right here at this low here on the 1 hour, see, I might have missed the... I do think it's going to go through the roof, and I think it's going to go through the floor, so both could happen. So what order is it happening? So if I buy the plunge first, so really this is the thing, how dense. Every 3 pips, I'm going to buy really super dense right here. So I'm going to stack in 5 pip ranges, big fat orders. I'm going to go up in size as far as the pendings go. Looks like the British pound is going to go through the roof here finally. So that'll be a big, huge pullback in this. I'm going to buy new lows. Also going to buy down here. Place it right on the wick there. Easy way to place orders is right down here. Drop it right on the perceived support. And this is going to fill in. You get that amazing price. People can't believe the wicks on these markets. Until you've blown up an account, you just don't realize how vicious these markets are. Literally, take no prisoner price action. British pound is knocking on heaven's door here. Pretty nasty pullback here, unless you're prepared to buy this wick down here. So you have to go from a breakout trader to a limit entry trader in a drop of a hat. It's the top of the hour, and we have a winner. The pound's actually up, but I'm not in big enough to make any money. Starting out with $10,000, treading water, maybe down 1,500. Down below the $350 loss. Since the day I opened this account, it was Monday. Okay, I'm going to have to work the night shift here. So I'll put the buy limits here on the pullback on the pound. We could come in and dip down. I'm selling the, I'm buying the dollar yen as it comes flying back. Here's my dollar yen buy. Super deep. Big giant orders down here. And I'll put some bad ratio orders in to try to make some money. Risk 20 pips to make 10 pips. No brainer. That works all day long. Because we could definitely slam down and bounce. Here comes the British pound, going for the high of the day, going for the high of the week, going for the high of the month. Right. Big void to the north side here. Monster crush north coming on the pound. And you make the call. But you had to be willing to buy that pullback. Look how vicious. So what you don't see is, oh, sure, it looks like a good buy here, right? Like, oh, yeah, it's going up. Don't forget, if you zoom into this, you wouldn't say that if you were looking at the 5-minute chart. You'd be shitting your pants at this point. So you had to buy that new low. Do what no one's willing to do. Step in front of that train. Vicious pullback here coming on the dollar yen. Brutal. Literally brutal. Obvious. Right buying zone, the void. No currency is going to go that far in one direction that long. What were people thinking? Here comes the real Brexit people. All aboard. So we just nicked that. We just clipped that puppy. So if you drill down and examine this on the 5-minute chart, that event, 1-minute chart's the only examination. You can't see it. Right? That's the, wait, here, no, here's the first probe up. So you can't, that was the high from, you're just retesting. See, that was taken out way back here. And look how far we've gone south during that time. You can't even see it on the chart. That's how tight this stuff runs. How narrow that window is. I could pop above. If we take this out, it's going to be catastrophic for the this is going to be a serious battle here. So the 5-minute, this void's filled. Ride's over. So this is why I had to get out of something along that way. Now I could take hit the take all profits key, or I'm going to let that ride through the top of this. High probability, I'm going to take out this thing. Just keep on marching north. Auction is going to go totally north now. Full auction to the upside. So wait here. We should know in 5 minutes. Yeah, it looks like the jury's in. She's going through the top of the day. Now this could be catastrophically Brexity. Once we take out this wick, where are we at in the picture? Huge hole for the next about 25, 30 pips there. Monster hole to fill. Huge buying opportunity on the dollar yen for a bounce. New Zealand is reversed. Buying new lows was genius. How big did you get in? Buying new lows is genius. This is what they call the market maker entry. Dude, you're just buying new lows. No, nothing to see here, people. The daily. Buying new lows. Right for the scalp. No brainer. Selling new highs. For the scalp today. Still crushing down on dollar yen. The dream machine is, it comes down into this. The dream entry. The trade that you dreamed about. Woke up in a cold sweat. Tripled your account. That's the trade. So I've dreamt this trade before. Psycho rally, psycho plunge out of the trade. Is this a buy? Could be. Slightly in here. Is the Brexit going to be a fake out or a breakout? Breakout or fake out? First I got the breakout. Oof, pretty dicey up here. Let's go to the crystal ball, which is the 1-minute chart. Oh boy. Uptrend in the 1 minute. Can't deny that. Is it over? It's like the fireworks display. Here's the 5 minutes. Almost complete fill. Will the sellers come in here, or will they step away for another day? We're a quarter pip from making this is the true Brexit. It's truly going to happen.